Welcome to this week's episode here with Cake DeFi, discussing what's happening in the markets, what's happening in our company, what's happening with crypto, what's happening in the world of decentralization, centralization, and as always, lots of opinions. We try to back it up with as much data as possible. So it's October the 10th. It's actually my son's second birthday, 10/10/2020. A nice birthday 2 years ago. Time flies, time flies. It's insane to kind of think back of that. Um, yeah, we have quite a few interesting topics. We're going to discuss the Ethereum staking launch on Cake DeFi. We're going to have a lot of discuss with the economic data, especially this week. I think the main focus there is really going to be around the CPI numbers and a couple of other juicy things in the crypto world. I think we're gonna get going. Fabio, first and foremost, how's everything on your side? How's everything with community? Give us a bit of a glimpse there.
Hey everybody! It's definitely a little bit more quiet out there than in other weeks, and I guess the community in general settled a little bit after a kind of turbulent Q3. And what kind of impressed me, I saw that yesterday on I don't even remember on what Twitter account, but they kind of made a summary of the whole of Q3 and all different kinds of asset classes. And I think crypto in general and Bitcoin, especially Ethereum, I think Ethereum was up more than 10%. Bitcoin was up 3% in Q3, while all other assets like gold or the euro or S&P 500, Nasdaq were actually down just from within Q3. And maybe some heated discussions that we had in the beginning of September and in the mid of September, like proof of stake versus proof of work, other bigger fights within the crypto space, they kind of died down a little bit, and a general mood of complacency settled in. So people just don't care that much anymore, I guess. That's at least my first impression of the last 7 to 10 days, maybe.
Yeah, you probably. I agree. Actually, I mean, we discussed this so many times. It's actually always the bottoming sign in any market is always when people stop caring as much, and they don't trigger as much anymore. So, I always hope that this obviously doesn't happen too fast. But on the other hand, I always appreciate it because I know that that's a bullish sign long term. So, yeah. Great. With that, let's dive in. I think first and foremost, the big news for us last week, we launched on Thursday. I think it was one of our most well-organized launch, not only internally but also from the outside, was the Ethereum staking launch. We are a staking provider now that is launching with nodes based in Singapore. This is to the stark difference to all these US-based staking providers. We are completely transparent about the rewards. This is important, so you know that we're not getting the rewards somewhere else, double dipping or leveraging or playing around with your funds. And later this month, we're going to have a secondary market also, so you can exit your position if you want to. I think the launch went really well. A lot of great user adoption already. The goal for 2023 is that we become one of the top 10 Ethereum staking providers globally. So we definitely have some room to grow there still, but that would be great. And I think it would be great for the decentralization of Ethereum. I think it would be great for Singapore. Obviously, it would be great for us. And thanks so much already who is staking here already. And for anyone who's not, head over to cakedefi.com/staking. You see everything that's happening there on the Ethereum side. We're auto compounding your rewards, so you should be getting really, really nice rewards. And also, we are launching a couple of social media campaigns around this. That's basically a glimpse into the future that's going to go out tomorrow on Twitter, which is a meme machine. So it would be awesome if you participate there. What's your best ETH staking meme for Cake DeFi? It would be yeah, super great if you participate. We're gonna like and retweet and share. So obviously that's gonna be quite some fun. It's gonna be interesting to see what you as a community are gonna be able to bring out of that. Yeah, obviously also key maybe to mention, we're gonna be adding more staking coins this year. And don't worry, that doesn't mean that we are not focusing or that we stop focusing on any of our existing products and services, not at all. But obviously, we just also want to add more and more services and products. And there's going to be a lot of cross marketing as well. So hopefully, people hear about Cake DeFi for the Ethereum staking. They look at Cake and they look at, oh, what coins, what services are there? Ah, great. There's Bitcoin Earn. Ah, there's DeFi Chain. Ah, there's this coin, that coin. So I really hope with that, we're also going to bring a lot of exposure to a lot of the other services. And so there's some strong win-wins. Yeah, what has been the feedback that you've seen so far from our community? But everything I've seen so far was very positive. What's been your take there?
Definitely super positive, and it was a great launch. As you mentioned, there is one thing I would like to mention, and so the main question is that I saw on socials or in our Telegram community is sometimes the yield that we display on the website tends to fluctuate. So and let me briefly touch on why this is. So at Cake, we don't just enter a number and we say, okay, you will get a yield of 5%. The number that we are displaying is actually based on the last 14 reward cycles that were paid out. So we are taking a moving average of the last 7 days, and we are displaying this as a net. So the fees are already deducted, everything. So we display what you actually get. Now, this tends to be a problem when we launch a new product because it doesn't have 14 cycles to base the value on. And so you see these big fluctuations. So it goes to 5-6%, and then suddenly it's 0.8 or it's 1.8. Just bear with us. This is only happening in the first 7 days, and we sometimes we adjust it manually because there are so many questions. Why is this fluctuating? And it's just because of the mechanism on how we display the yield. So yield is between 5 and 6%, but during the first 7 days, there might be some fluctuations where the yield is displayed slightly differently. This was one of the main questions that I saw. And the other one is for everybody that is new to Ethereum staking, it might be very important to understand that the code to unstake your ETH is not written yet. And this is an Ethereum thing. There's nothing Cake can do about that. There is the Ethereum staking and the merge, what happened in September, but there is an upgrade missing to unstake that ETH. They will launch that with the Shanghai upgrade. They didn't communicate a very specific date and time for this yet. An estimation is approximately 6 months, but that can be sooner, it can be later. So, but what is important for you to know? So, most services that you're using, it's actually not possible at all to unstake your ETH. You just need to wait until Shanghai update is implemented. But on Cake, we will try to implement. I'm not 100% sure on the timeline. I will drop this over to Julian. Maybe he knows a little bit more. But we are working on a secondary market where you actually can unstake your ETH and trade it, even though the Shanghai update is not implemented yet, which is, of course, a big benefit that you won't get in a lot of other places.
Yeah, nothing else to add. You're spot on right, and it's important that you point this out. Great. I think went really well. We have a couple of things planned as always for Q4. Quite excited. Expanding obviously on the staking side, expanding on the earn side. We're gonna make a separate episode reflecting on Q3 when we have the transparency report out a bit later this month, and then also gonna be a bit of a Q4 preview. So we're not gonna go too detailed into this. Obviously, we keep building, keep developing, keep evolving as always. I think we can shift perfectly over now to what's really kind of going to be moving the markets this week. and that is CPI numbers. Maybe where we're standing at the moment, for some reference here. Yeah, Bitcoin dipped over the weekend. Reason for that was Friday. We had unemployment numbers who were better than expected, meaning we had lower unemployment than expected. And so the reason why these good numbers are bad for the markets, because people are now fairly certain that the Fed is raising interest rates on November 2nd by 75 basis points. And so the odds of it going 50 basis points is lower. Yeah, the market over the weekend really reacted to this. And yeah, it's been going down, been going down, been going down. Also, crypto, it went from slightly above 20,000, dipped over those couple of days by about 4 or 5%. Over a week-to-week basis, crypto has been relatively stable. So some coins a bit in the green, some coins a bit in the red. So plus minus. So I think markets really been kind of flat. Everything a bit in the waiting moment, and we are seeing this big kind of yeah move this week. Obviously, Wednesday we see a little bit on the details on what the Fed has been talking about in its last meeting. I would be surprised if we see some surprises in there. I really think it's going to be way of more focus on what we already know, which is focus is going to be on inflation. Obviously, it's going to be regular CPI and core CPI. The key difference is always energy. That's always a key kind of metric that gets differentiated there. On regular CPI, we are expecting about 8.1%, so a drop from the 8.3% from the August numbers. So always remember, October is going to present the September numbers. So in September, we heard the August numbers. And that's going to be the major thing here. If those CPI numbers are going to go into the sevens or even lower, again, I'm actually someone who believes that we're going to see suddenly this drop off like a cliff. So it's not, to me, it's not going to go down 0.2%, 0.3% or something. This is going to go from 8 to suddenly 4%. So this drop is going to be dramatic. If we see such a drop, obviously the market may actually react super bullish and it's going to start rallying, because this could actually mean that the Fed is rather going to only raise by 50 basis points. However, if on the other hand, we actually see higher than expected numbers, then the Fed may actually go for sure with 75 basis points, maybe even with 100. I would think, though, out of today's perspective, 100 is out of the question. I want to point out one thing. 1 month before the last interest rate, so now we're only 3 weeks out, but 1 month before the last interest rate hike, no one, or actually a super tiny minority, had expected 75 basis points. And that was a month prior. And then, like, the closer we came, the more guaranteed it became that it was 75 basis points. Yeah, so that was kind of the thing there. Fabio, what are your thoughts, your opinions, your add-ons to all that?
Yeah, I guess it's CPI is the number that everybody's waiting for. And with some numbers, it's actually a little bit confusing, because good news is actually bad news, especially when it comes to unemployment. So if unemployment is going to be low, which is actually good, because we don't want a lot of people to be unemployed. So a low unemployment number is actually a good number, but it's a bad number if you are in risk-on assets, or if you were expecting the Fed to make a pivot, or that risk-on assets want to rally. We actually want to have higher or a change in unemployment. So a lot more jobless claims and rising unemployment would be good news. But, so bad news is good news is bad news. And I guess this is... with CPI, it's a little bit different, because CPI, we actually want to have lower numbers. So if CPI is, I don't know, in the 7 percentage point or lower, that would be good, because this is the number that the Fed, or I guess everybody, is watching. They're fighting inflation. We want to see inflation getting lowered. I'm watching a little bit what the pros have to say. So, for example, Raoul Pal, I guess many of you know him. He's a macroeconomist. He's worked for Goldman Sachs. He's a big name in the space, and he recently gave an AMA, and he expects that the next rate hike is going to be the last. And there's a lot of people actually agreeing with him. Some are not, some are. I guess this is maybe he has a little bit more data than we have. But it's certainly dependent on the outcome of the CPI number. So this week is probably going to be a very big week in financial markets, and some volatility is expected. The thing that I'm currently watching, or I'm slightly surprised by, is the thing that I mentioned in the beginning of the space, that Bitcoin is actually, or crypto in general, is actually holding up quite well. When you look at S&P 500 or the Nasdaq, while they are making new lows, and Bitcoin or crypto in general is actually just going sideways. And usually Bitcoin is dropping, or crypto in general is a lot more volatile or dropping harder than the S&P 500, for example. So it's certainly too early to call this a decoupling. But it's interesting to follow the moves there and what is about to happen.
Yeah. I mean, on Friday, we're going to see banks reporting numbers. So this is kind of the first start of earnings season. That's going to be an interesting one as well. Kind of set a bit of the direction. In general, I think, though, banks are not going to be the ones who are going to be setting the kind of sentiment for the earnings. I think that's going to happen a bit later this month when the large tech companies kind of start reporting. But that's going to be an interesting one. Yeah, it's interesting that Raw Paul thinks it's going to be the last rate hike. I mean, for that, if we discuss this through, this would really mean that the Fed by December, so let's say in about 7 weeks, is when is the exact rate hike here? Let's pull this up. Here's your very Fed so 15th, right? No, so Fed here. So 14th of December, so right the day after the November CPI numbers. So yeah, in about 2 months. So basically that means that Rao Paul thinks over the next 2 months we see such a, could easily be actually, because the November numbers are coming out. So actually could not be so off. Could easily be that maybe in December the Fed says we are holding off. Let's monitor that a bit. Yeah, actually, could be sure 75 basis points now. Then we're ending up at about 4%. Yeah, again, the market is kind of expecting flattening out at 4.5. Yeah, so okay.
There's always the question, what would max pain be? And I guess, if we have this 75 basis point rate hike in November, which everybody expects, probably priced in, not a lot is going to happen. But if they are changing their approach, so if they are lowering the rate hike in December, or if they make a pause, I think the market is going to turn bullish instantly, but probably without legs.
Yeah, of course, it's gonna go nuts, especially as soon as it doesn't even have to be that the market has to wait for mid-December, right? So this can already be enough that can happen. A month, like 2 weeks before or something, right? So yeah, it's gonna be a lot about the signaling here for the Fed meeting after the November one. So yeah, you're right, and it could it could go through the roof.
And we haven't saw like a really, really strong bear rally yet. Like we have seen some slight or some minor rallies, but
Yeah,
really
the
strong
July
rally
one was pretty aggressive. I think
yeah.
we're forgetting it now again, but I think the July one was pretty significant actually. Yeah. Yeah, I think these are the key things to watch. Interesting. Couple of other news. Because other than that, I really think it's um, all about the Fed meeting, all about CPI numbers, and then the expected Fed meeting. It seems Mount Gox is kind of setting a repayment deadline of January 10th, so in 3 months. Let's see how fast afterwards people actually get their coins, in what form, how does this work. That's definitely going to be an interesting one. We've seen, do you want to talk about PayPal? Maybe that would be also an interesting one.
Yeah, sure. So if you spend time on Twitter, you definitely saw the whole PayPal incident, and like without pointing any fingers, just
Without
what
pointing
was
any fingers, but
what happened basically was PayPal had an update on their terms and conditions, and somebody found a little part in their agreement that mentioned a fine of, I think, $2,500 where they can fine their users for misinformation or for I don't know, like if they violate certain guidelines, they can fine their users. And this blew up completely out of proportion, of course, on Twitter, and everybody started to say, "Okay, delete your PayPal," and there were screenshots posted of people withdrawing their money, and it kind of made the round on Twitter. And PayPal's answer to this was to deactivate the function that you actually can delete your account. So you can still withdraw everything, but you cannot delete your account. And I don't know, it's a lot of crypto people, of course, they say, okay, this is the final coffin in the final nail in the coffin of PayPal, and they lost it, and this is why we need Bitcoin, this is why we need crypto. Of course, this was like a welcoming thing within the broader cryptocurrency space. I'm not quite sure how this could have happened. Like, if PayPal says, "Oh, that should have never been in our terms of conditions or in our agreement," the question I seriously ask myself is, how can this be? Like, how can this section end up in the terms of conditions? That so many things must have gone wrong that this is included and published. But maybe where people work, mistakes happen. So yeah, but it's definitely not a good look for them.
yeah. I completely missed that a bit. You mentioned that prior. Yeah. Um, I don't have much other updates. Not because I don't want to share anything else, but because it's. I do understand why people are a bit on the dry side. Just because it's not everything is just waiting for CPI numbers right now. Am I missing anything?
I would say the interesting thing is also what we mentioned in the beginning of the space, that mood of complacency that I can vividly remember. So 2018 was my first real bear market, and there was initially, when we had the first drop and everything sold off, we had like two rallies where everybody was like, "Oh yeah, we're going right back to 100K, and everything is this is not a bear market, it's just buy the dip, and we're going to continue higher." And this narrative was pretty dominant for, I don't know, maybe the first 6 months after the 2017 top. And then we had this phase where we were hanging out around $6,000 for a prolonged period of time, and we were just moving sideways, and everything got pretty boring. And like, I can imagine that we're at a similar stage right now. It's always hard to say, but remember, from that $6,000 level that we experienced at the end of 2018, right about Christmas, we dropped another almost 50% to 3,000, and it was around that area where most people lost almost all interest. So how I feel that happening within my own circle of friends or family is, initially, like maybe a half year ago, they were asking, "Hey, should I buy the dip, and when are we going back up?" These questions have completely stopped. So people are not asking anymore what to do. They haven't sold, so they are kind of hodlers, but it's more, so many people, they have a very, or at least friends or family of mine, they have very small positions in Bitcoin or in crypto, and they uh, kind of start to forget that they even have this position. And I can foresee a little bit more of that coming or happening, that people just lose interest in general. So if you look, for example, at big Twitter accounts like Bitcoin Magazine or Bitcoin Archive or Plan B, Benjamin Cohen, they used to get 10,000, 15,000, 20,000 likes during the bull market periods. Now they are struggling to reach 1,000. And it's like there's still the same amount of Twitter users, but I guess people are just not spending each and every day on Twitter to follow everything. I guess a lot of us, we kind of made peace with ourselves that this might be a year or 2 years without any significant price action to the upside. And so I guess we're focusing on other things. Yeah, this is probably the main thing, or the mood in the crypto space in general.
Yep. I agree. Definitely cool. Yeah, I think you're hitting it on the nail on its head. Uh, we're cutting it short. I don't have anything else for you. Yeah, with that, I hope today's episode, even though short, gave you a couple of insights. We're definitely gonna have longer ones again, but at the moment, it's just not as much. So no point in faking it. Hope you are subscribing, following, liking. If you're not using Cake yet, then please head over, become a customer there, and yeah, check it out. Become one of the customers. Um, get cash flow on your crypto, Bitcoin. Earn, I think, 10% per year on that. DeFi chain really choose your returns. Ethereum staking, absolute no-brainer. So check it out. With that, yep.
Maybe just two things I want to mention before we close it off. Check out our YouTube, especially if you want to follow these episodes with video and a few charts. We're also on Apple and on Spotify if you want to enjoy this in podcast format. And one thing that's a personal request: we have a Bitcoin conference in Amsterdam this week. I'm going to be there for the full 3 days. If you're also there and if you want to meet up, drop me a DM on Twitter, drop me a DM on Telegram. I'm happy to meet up and talk some crypto there. Yeah.
Very nice. Great. Do that. All the best in the meantime. Thank you so much, everyone. I appreciate it. Stay safe, stay healthy. All the best. See you next time. Thank you so much. Bye bye.